What is going on, investors? Hopefully, you guys are having a great weekend. That is right. It is Saturday, and it's time for the weekend stock show. Sorry about no show last week. Had a lot of family stuff to get to. But look, we're putting the family on the back burner because we've got a busy show for today. We'll first go over the QQQ and the SPY. We'll take a look at the markets from kind of just a broader perspective. I want to show you just the kind of trends that are intact on these ones. We'll go over what companies are reporting earnings next week, and we'll talk about maybe some of the videos that we'll have, maybe some of the catalysts that some of these earnings reports will produce. We're going to talk about that jobs number that came out, I believe that was yesterday on Friday. We'll talk about this jobs number just from a broad perspective about what it meant. And it was a terrible jobs number, but the stock market went up. And so that confused some investors. So we'll talk about that as well. Cathie Wood is in a slump and everybody is trying to outflow from her flagship ARKK fund. We'll talk about this. We'll talk about, the kind of investments that she has. We'll take a look at some of the charts on them. We'll talk about, can this thing bounce back? We'll talk about that as well. We gotta talk about Dogecoin, baby. It's got just a $92 billion market cap on this cryptocurrency coin. I got friends and family calling me all day. Some of them have 10 coins. Some of them have 100,000 of these things, and they're asking me what they should do with it. So we'll obviously look at the charts on that one as well. We'll take a look at Bitcoin. And look, we'll send you along on your day. Now, first thing is first, let's take a look at the SP 500. We're looking at the SPY ETF, which is basically a proxy for the S&P 500. And here's what I see, guys. This is not fancy technical analysis. You can probably go on YouTube and find guys that do much fancier technical analysis than this. But it doesn't get any harder than this. Here's our low back in March of last year. Obviously, we realize what that low kind of represented. And we have been in an uptrend, and we are still locked in an uptrend. I would not, and I repeat, I would not expect this thing to break until it actually does, okay? And when you're looking for a break, and you could draw this line in here a little bit more accurate, you could maybe start the low here and start cutting through more spots here. So you got to really break below this on some red candles and probably follow it up with 2, 3, 4, 5 red candles, because look, we've broken through this a few times along here with 1 or 2, 3 days of kind of downward pressure. Wouldn't be looking that this trend is broken until that happens. Now, the QQQ, which is a proxy for the NASDAQ, little bit different story, although it's not as firm and confirmed of an uptrend. It is still looking okay to me. We're sitting right here where our previous all-time highs here. We kind of peaked above it again here. It might not be all-time highs. NASDAQ might have been higher in the dot-com era. Could possibly have been. But here's our other highs here, and we're just kind of sitting on it. We're literally sitting on a level of support. And so what I'm looking for with the NASDAQ is, can we pop back up here, in this case to the $340, $343 range, or will it break down? And if this thing breaks down, it wouldn't be like overly concerning to me. As long as you don't break maybe the 325 range, which is about $10 less than where this ETF is trading, that would put us into a lower range. I could see this thing channeling, just because if you follow the channel, we cover Amazon and Apple and Facebook and a lot of the stocks that are tied up into this NASDAQ ETF. They're set, in my opinion, to kind of channel sideways. Not necessarily, they had a big run. I mean, we see the big run from November all the way up until February. This thing made a big run and then went down and then made another big run. That to me is kind of more how the NASDAQ is kind of set up, that we'll have a nice run, we'll have a little consolidation, maybe a little bit of a pullback, and then have those runs that last, maybe they last 2-3 months, maybe they last only a month or two. That's why I think you still want to be fully invested in these ones. Now, let's take a look at the earnings next week. So we've got some companies on 5/10, which I believe is Monday. We got Wynn Resorts, Virgin Galactic, Simon Property Group. Will certainly do some videos, at least on those two stocks. Then 5/11, we got Palantir, Lemonade Health. We got Hyliion, which I think that's how you say that. You got Big Commerce. So some interesting stuff. We'll certainly do Palantir. I got a lot of people that request that here on the channel. Probably do another one of these as well. On 5/12 on Wednesday, I will be on the Trader Merlin show. This will be my, I think, second or third. This is my third appearance on that show. It's a live show every day hosted by Merlin Rossfeld, and it's just a fantastic show. It's one that it's one of the few finance YouTube shows that I watch on a daily basis. Brings on guests all the time. I even like the shows where it's just him talking about the market. Now, his show is more focused on trading. So it's interesting when I come on because sometimes we're talking fundamentals, sometimes we're talking going long stocks and things like that. So it's a little bit of a switch up from what they normally do on that show. I'll put a link to his show in the description below. Now we've got on 512, we've also got Wix, Poshmark, Bumble. The following day, you got Disney, Airbnb, DoorDash, and later in the week as well, you got Alibaba on 513. We'll certainly do videos on Alibaba, Disney. We'll definitely do Palantir and Simon Property Group, and probably Virgin Galactic too, since they don't make any money. I like to talk about, got to throw in those companies that don't make lots of money. Now, speaking of not making lots of money, there's a lot of workers on the sidelines these days. Maybe they're collecting that money from the government. The April payroll, non-farm payroll jobs report came in, and it increased by 266,000 jobs. Sounds like a lot of jobs, right? Well, unfortunately, the Dow Jones estimate was for 1 million new jobs. So like 4 times that. Can you believe that? And they expected the unemployment rate to drop to 5.8%. It actually rose to 6.1%. And you might be asking yourself, well, this is a pretty dismal job report. Why did the stock market actually react positively to this? 2 reasons. Number one, because the jobs report is showing that there are less people going back to work. What does that mean? It means really 2 things in the sense of what's going on in Washington, D.C. Number one, it means continued Fed action. There was rumblings earlier in the week that Janet Yellen was saying, well, they might have to raise rates if the economy overheats. Well, here's your evidence that the economy is not overheating. In fact, it is slumping, okay? If you had added 1 million new jobs and the unemployment rate dropped, I actually probably would have expected the stock market to go down. But this is showing you that the Fed is going to have to keep interest rates at near zero, which they are everybody except for Janet Yellen has been kind of telegraphing that, at least from the Fed and Washington, D.C. side. So that is good for stocks, okay? You can just come back here and look at the chart of the SPY and look, low rates are good for stocks, okay? And that's kind of what we've been. I mean, that's why, or one of the biggest reasons we've had one of these big, gigantic snapback rallies, even though technically the United States is still in a recession and you've got 6.1% unemployment rate, which is 2 or 3 times higher than it was a little over a year ago. So you will continue to see Fed action. The other thing that this shows is that inflation is probably not a concern, okay? How you get inflation is, number one, is you get wage inflation, okay? Yes, we're seeing lumber and copper and these types of things just skyrocket in price. And we could have an argument on whether that's permanent or if it's something that's just a temporary, something that we're seeing in the market that's just temporary. I've seen a lot of good evidence actually on both sides, but I have to, I don't think that copper is going to continue to trade at all-time highs. I don't think lumber is going to continue to trade at all-time highs or continue to go up in price. We've also seen oil go up in price considerably since the election as well. These things, in my opinion, with a 6.1% unemployment rate and with adding this few jobs in a month, gotta figure that stuff could be potentially temporary because those prices could not be passed on at some point to the consumer. So we'll see what happens there. But this job number basically confirmed that the Fed will not be able to do anything with interest rates like Janet Yellen kind of suggested that they might. And it also is showing you that, yes, we are seeing some quote unquote inflation or price inflation in some segments of the market, but that is likely going to be temporary. And so those are 2 of the bigger concerns in the market is rising rates and rising inflations. And in my opinion, this jobs number it doesn't squash it to bed, but it kind of makes you think, well, maybe that's not something that we should have as big a concern about. Now, speaking of concern, Cathie Wood should be very concerned because over the last few weeks, her ARK ETF, the flagship ETF of the ARK funds, the ARKK, has posted 6 straight days of outflows. And actually, you can wind this chart back. I wish I could. But she's almost had never had very many outflows. But we see starting at the beginning of the year, there's been many, many days. So this graph, if you're not familiar with how an ETF works, there's money flows in and out of the fund all of the time. Okay. So if more people are putting money into the fund, you get positive flow of cash into the fund. And for ARK, for the last several years, probably, she's constantly had positive inflows because the performance of the ETF has been fantastic. But unfortunately, during this month and the last few months, the performance of the ARK Innovation ETF has been disastrous. Over the last month, ARKK is down 9%. Her ARKQ ETF is down 4%. ARKW is down 8%. ARKG is down 7.8%. ARKF is down 7%. And the ARKX, which just launched, is down 1.78%. And you might say, well, that's not that bad. You know, the market's kind of been gyrating. Guys, no, it hasn't. Look at the S&P 500, guys. This is the kind of performance that we've seen if you were just baked into an S&P 500 fund. Now, of course, her ARK ETF is mainly like, you know, tech and kind of speculative type stocks. And we see here that the NASDAQ QQQ kind of gyrates a little bit, but you can't be paying a money manager to lose you 9% in a month. It's if you keep doing this over and over, yeah, she's going to have a rough month now. But she says, Cathie Wood at least says, she loves ARK's setup in the market. She has been going all in on Coinbase, Teledoc, and buying the dips on some of her most critical positions while selling off positions in other stocks like Apple and Amazon and Google and some of these other stocks that are proven winners. So what I wanted to do is take a look. She's all in on Coinbase. I mean, you can get, if you go to ARK's website right here, you can sign up to see her kind of daily trades and kind of what she's buying on a daily basis. Okay, what has she been buying on a regularly basis? She's been adding to Teledoc, which we'll take a look at on the chart. But Coinbase has she really loaded up on Coinbase. In fact, she sold a little bit of Tesla. It appears to buy even more of this Coinbase. So she bought a little bit of Zillow this week as well, which reported earnings. She has been going all in on Coinbase. So what I want to take a look at first is the Coinbase chart. So I'm on a 30-minute chart because it just went public. And if you're on a daily view, you've only got a handful of candles. So this gives us a little bit broader view. What do I see here? We got a high here, lower high here. We're actually sitting right at this lower high. So what you're looking for with Coinbase, and obviously as Coinbase goes, somewhat how the ARKK Innovation ETF will go too. You're looking for a close above 266 on this one, okay? Because that's basically our new low on this one. You're looking for a close above that. Now, unfortunately, if this thing pulls back and you're looking for, if you go below 250, 252 on this one, that downtrend is still intact, and it is intact until further notice. Me personally, I thought about buying this one from a fundamental perspective, and I looked at the numbers. The numbers are fantastic. The valuation, completely out of whack. The other thing that I thought about was, well, I could put money into Coinbase, or I could simply buy a Dogecoin or Bitcoin. Okay, and if you look at the stuff, we'll look at the stock charts of these obviously here in a minute. And I tell you what, I think I'd rather just have my money in the crypto than invest essentially in a derivative of that crypto, at least for right now. Okay, but at some point, Coinbase is going to bottom. It's going to show a bottom. Okay, but this is catching a falling knife. Cathie Wood is doing something that amateur investors doing. And I'm saying Cathie Wood, she has a team doing all this. And a lot of her team seems kind of young. And some of them don't have experience in the stock market. Some of them come from other industries. And that's fine. I'm not here to criticize their performance. Now, over the last month, we can certainly criticize. But just spread this out to a year, 2, 3, 4 years. And they're having incredible performance. But I will say on this one investment, They are just illustrating what I consider kind of amateur performance. Okay, they started buying this thing the day it IPO'd up here, and it has just been falling, and they're just continuing to buy, which again, if you have inflows into your ETF is not a bad strategy, but let this thing, you as an individual, let this thing show a bottom. This thing is not showing a bottom yet. Okay. Let it bottom out. This stock is not going to snap from 264 back up to 304 in a week. It's just not going to do that. Okay. There's too many this was a direct listing, which means the insiders can just sell right away. There's no lockup period. Okay. And that's exactly what they're doing. Okay. The executives and insiders at Coinbase are just selling. They're cashing out, and no one's going to blame them for that. Okay. They've built this company for years, and now it's time to collect a payday and get rich and go buy a yacht or go buy a new house or whatever it is. I don't care. But this thing is just locked in a downtrend. Okay. And to think as an investor, I'm just going to buy the dip. No, just wait till it bottoms out. Wait till you get a little bit of sideways consolidation. I mean, this thing bottoms, pops. I would expect this thing to go lower. Okay, heading into the next week or so. And guess who's going to be in there probably buying it is Cathie Wood. So we'll see if that strategy continues. If that strategy continues, she's going to see more outflows. And the more outflows you see, it puts a crimp on the type of buying that she can do. And look, maybe that's good. The other stock that is getting absolutely hammered right now is Teledoc. We covered this here on the channel. I said I wouldn't touch this thing. There's been reports by major analysts that saying telehealth is a, quote, commodity. So what that means is it's not like an Apple iPhone that has, IP, and that, you can replicate the iPhone, but it's very hard to do. Or maybe like a brand like Titleist. I'm about to head to the golf course. Okay, Titleist makes wedges and putters, and sure, anybody can make that, but they have certain amount of IP that gives it kind of a leg up amongst its other competitors. Look, a video teleconference with your doctor, I can do that on FaceTime. I can do that on Facebook. Not that I'd want to, but you could, I guess. You could do it on Zoom video. And just anecdotally, over the last, few months, I've had some telehealth, visits with my doctor. It's been on Zoom, or it's been on kind of like a internal kind of proprietary thing as well. Some of these healthcare companies, these big, gigantic conglomerates, could afford to do this technology themselves. They don't need Teledoc. They don't need Zoom. They don't need anybody else. Okay. It's not that complicated at this point to do televisits. So there's a lot of people thinking, well, Teladoc's kind of a commodity. They don't make money. They just acquired Livongo Health, and people are talking about how, look, that merger needs time to kind of work its way through the profits and the financials of the business. Here's the deal. That company wasn't profitable when Teledoc bought it. And take a look at the Teledoc stock chart. It's gone from 300 to 50%. It's gone down from 300 down to 150. Okay. They could have bought that company for way less if they had just waited. They made the management of Teledoc made the cardinal sin of your sector was as hot as it's ever been and probably ever will be in the height of the pandemic. Telemedicine was just everybody. It was like people were falling over themselves to invest in companies like this. And they went out and made an acquisition during that time. That reminds me of like Yahoo and Time Warner and AOL buying stuff at the height of the .com boom, only to have that technology kind of become commoditized. And all of a sudden you overpaid. And so that's what happens with Teledoc. They overpaid for their acquisition last year, and they're going to get punished for it. And neither company was making money before, and they're not going to make money in the near future. And not only that, you've got all this competition out there, which means what? You don't have any pricing power. This company cannot go to healthcare or doctors or whoever and charge an absorbent amount like an iPhone or something like that, okay? Or like Titleist clubs, they sell putters for like $300. You can get a putter for $100, okay? When you have pricing power, you have a good brand. You are not a commodity, and I don't think Teledoc is in there. So I don't like that investment. Of this, I don't like this investment. I'm not sure about Roku. I like Square. Shopify's a good one. Spotify, I don't like that investment as well. Streaming music is a commodity. You've got Zoom video. At least you got a little bit of that. You got Teledoc and Zoom, so you capture that market. And you got Coinbase here. I don't like this investment right now. Okay, so that's where I stand on that. Cathie, would I invest in any of these ARK funds? Yeah, if they pull back enough. I do own some ARKG. That is speculative healthcare. That is something I cannot do on my own. I do not want to research these health companies. I am not capable of researching these healthcare companies on my own. But in terms of innovative portfolio, look, I can build a portfolio as good or better than this. Okay, these companies are easy to understand. And in my opinion, this is like a mismatch of what I'd like to be in. I'd like to be in Tesla, Zoom at the right valuation, Zillow at the right valuation, and Square and Shopify at the right valuation. Teledoc, I don't want any piece of that company. Don't want any piece of Roku. Would rather own a Netflix or a Disney personally, or maybe even like a Comcast or some of these other, media companies out there. Don't want Spotify. Much rather just own Apple and get a piece of that business. And finally, you got Coinbase down here. I'd much rather own crypto, Bitcoin, Dogecoin outright, because if you look at the performance of those, boy, it's been much better than the Coinbase stock. Now, speaking of crypto, our favorite crypto here on the show, I'm not saying it's my favorite crypto. I do own a little bit of Doge. I own a little bit of all. I wouldn't say all of them. All the main ones. Dogecoin, Bitcoin, Ethereum, Litecoin, in my opinion. And there's some other ones out there, okay? I'm not going to act like I'm a crypto, savant over here, but this is stuff that I've followed for a long time. Now, Dogecoin is trading at just a $92 billion market cap. It's just incredible. So let's get over to the chart of Dogecoin, because I'm getting a ton of questions about this from family, friends. Some people have been lucky enough to grab some of this. And here's the deal. The trend on this is just like the S&P 500, guys. Yeah, we had a little bit of a pop here, a dip, and back up. You just continue to ride the trend on this one. The trend is up, and the trend is your friend. Now, here's some spots down here. You got a spot down here at about 54, 55 cents, okay? A pullback to 54, 55 cents. I wouldn't panic, okay? You break below 55 cents. Wouldn't say that I would necessarily panic. I don't know, depending on what platform you're on, maybe you can set a stop loss there. There's a firmer level down here at 36 cents. So if this one were to take a dump, I would expect it to potentially come back down here to 53 cents, which we're sitting at about 71 cents at the current time. Or if it really takes a dump, it's going to carve off about 50%. Okay, it's gone up actually 50% over what I would look at as kind of a natural support level here, down at about 36 cents, 35 cents, somewhere in there. Now, here's what Dogecoin reminds me of. Dogecoin reminds me a lot of the early days of Bitcoin. Believe it or not, I knew about Bitcoin when it was just a few dollars, because one of the things I enjoyed to do when I was a little bit younger, I like to play online poker. I like to gamble a little bit, okay? Responsibly for sure, and maybe a little too responsibly, because I was actually successful at those types of things and not losing money. In fact, I think I was maybe not profitable from a sports betting standpoint or a daily fantasy standpoint, but certainly from an online poker perspective. And Bitcoin, especially early on, was very popular in those circles of people, like on forums and things like that. It was kind of a little bit before social media. Now, I remember when Bitcoin was at $3 and people were just doing backflips. Okay, this was at $3. Same thing is reminding me now of Dogecoin. We're approaching $1 and people are doing backflips, and people are looking at that as their point to exit. And if you want to exit your position, exit here anywhere. If you've it's hard to have not locked in some profits here on Dogecoin. If you want to lock in the profits, by all means. Again, one of the things we talked about that's different about Dogecoin than Bitcoin, there's a lot of differences, but the primary one is the float on this one just gets added to all the time. And there's just more and more and more of it pumped into it. Okay. So just understand what you're in, understand that it's extraordinarily speculative. Okay. But also understand that in the history of crypto, when things reach mainstream, okay, they do have these big pops. They will have epic drawdowns, but they've had a history of bouncing back as well, okay? There's not been a lot of cryptocurrencies that's gotten the attention like Dogecoin. I mean, Dogecoin is about as mainstream as it gets for a cryptocurrency. There's very, very few cryptocurrencies that have reached that level, okay? We're talking about on one hand, in fact, just a few fingers, you can count the number of cryptocurrencies that has reached the level of mainstream that Dogecoin has reached. So in my opinion, this one probably has got some more legs to go. I think the $1 mark, while it seems absurd, and in some ways it is, look, it might just be the beginning, in my opinion. So we'll see what happens there. But you've got some obvious pull. So if you want to lock in profits, you've got some areas here. A pullback to 57, 58, 54 could be where you jump off the boat, okay? The other way you could look at it is a pullback to 54, 55. That could be a buying opportunity for you as well. Now you get a bigger pullback. You get a quote unquote crash, 50% retracement back to 36. That should act as some support. Look, you break 36. Probably everything I said was wrong. This thing's probably coming back to 25 and under. And at that point, you might have some really, really bruised egos and a lot of people that have kind of piled in up here that have lost lots of money. So we'll see what happens. Again, you know, factor in that this is extraordinarily speculative. And so you want to have your sizing in whatever app you're buying this thing in, have your sizing accordingly. I've got some friends that have like their entire life roll wrapped up into this, and they're like sweating every tick it goes up, every penny, every 10 cents it goes up. They're sweating bullets because it's more money than they ever had in their life. Okay, if that's how you want to roll, go ahead. Okay. Me personally, I have kids, I have family, I have a house, I have a mortgage, I have a car, I have bills to pay. So I'm not going to put more than a few $1,000 in something like this, but the ride is fun. And I think, you know, for anything else, just enjoy it. Okay. I mean, to go from under fractions of pennies to now we're talking about 70 cents is absolutely remarkable. Now, same thing here with Bitcoin. I've been in this personally since 2014, so way back in this graph. I was back in Bitcoin, back in these ranges, back up in here. I think some of my first daily fantasy cash outs were in the $300-$400 range on this one. And so to talk about it up in here into the 58,000, 60,000 range is extraordinary. Now we're consolidating sideways on here. Okay. And that's not something that we've experienced for a little while. Okay. It's been a pretty monster move, and we've either been going up or going down with Bitcoin, but it has had areas and time frames where it's consolidated sideways. And I don't mind this. Okay. Consolidating sideways here is fine. We're actually at the top of what I would consider kind of a consolidation range, right about here up 58,000. Now, could it peak up above 60? Yeah, sure. Would I want to buy it up there? No. Can this be an area where if you're trading Bitcoin, some of you guys might be doing this for income, this is an area where you could potentially sell. Okay, maybe not all your chips, but you could unload some chips on the table here. A pullback back to 48. This is actually an area where I've bought. I've bought in this 48.50 range, actually several times during this consolidation area. And when I say several times, and what I'm buying, $100, $200 here and there. Okay, I'm just adding to it here. This is a long-term hold, in my opinion, because of the nature of Bitcoin. There's only a certain amount of them. A certain amount of them have been lost. I also look at Bitcoin as kind of the brand name of the cryptocurrencies. Is it the most useful? Will it be the most useful? No, I don't think so, but it is the brand name, and as the other ones go, I think Bitcoin to a certain degree as well. Now, the one that I think probably has the most useful and is a proxy for the blockchain in general is Ethereum, and we're seeing this one's just broken out, okay? This one's just absolutely on fire. I think, in my opinion, here's how I constructed my crypto portfolio. Bitcoin is number one. Ethereum is a very close second in terms of how much money I've put in. And then Dogecoin's just kind of a complete flyer. Okay. And that one's actually probably my best performing one, but that's how I would construct it. And I look at it as Ethereum and Bitcoin as long-term holds. Any kind of deep pullback I'm buying. Dogecoin, it's just let the dog run. Let the dog go to the moon. If he goes to the moon and back, that's great. If he doesn't, whatever, it was just a couple $100 or $1,000. It's not going to hurt my day. This one's on a monster run. I'd wait for a little bit of a pullback. You had to pull back down here to 32, but man, it's put up some solid green candles. Okay, what you'd like to see is this one take a breath a little bit, consolidate, and you could potentially jump in on that one. That wraps it up. Hopefully you guys enjoyed this video. Lots of videos coming next week as well here on the channel. Like I talked about, we're going to have Simon Property Group. We'll have Virgin Galactic. We'll certainly do Palantir. We'll do some of these other ones. Wednesday, Trader Merlin show will be live. I believe it's at the 2 o'clock hour of Pacific time. We'll be live on that show. You can also catch it on a replay, but if you're in there live, you can chat, you can ask questions, and those types of things. We've got Bumble and Disney. Those kind of, Disney certainly. Bumble will be interesting to see how they're producing. That stock is pulled back as well. You got Airbnb, which is recently public as well. Same with DoorDash. And then probably the big one of the week is Alibaba and Disney are the two biggest of the week. We'll see how those companies are doing. We'll see how their stocks react when they report those earnings. But that wraps it up for today. Hopefully you guys have a great weekend. We'll be back again soon. Good luck with your investments.